Learn how low-cost Vanguard ETFs can work for you at vanguardcanada.ca.
Let's talk to Raymond in Surrey, BC. Hi, Raymond.
Yeah, hello. I'd like to get David's opinion on Sun Life Financial. I'd like to top up my tax-free savings account this year with that equity.
Sure. So, Raymond, I think that really what you're making the bet on when you look at Sun Life currently is that we may have seen the low in long-term interest rates last summer at some of those panic lows. As a result, we're starting to see some improvement in the way that some of the life insurance companies are behaving. Life insurance companies are a big beneficiary if you see higher long-term interest rates. It helps them with their obligations in the future. And Sun Life, of the Canadian life cos, we think has some of the better fundamentals. So we own Sun Life. We're not prepared to make a bet that long-term interest rates are going a lot higher. I think they're probably more basing out, so you've had some near-term optimism. If we get decent equity markets in the first quarter here and you see interest rates sort of in and around these levels, the life cos maybe can go a little bit higher here. It's a little bit more leverage bet to interest rates than the banks themselves. So of the insurance companies, I think Sun Life is one that you can own.
Certainly had a good 2012. Dennis is in Burnaby, BC, with a question. Go ahead, Dennis.
Hi. For my tax-free savings account, I'm wondering about what you would recommend, TD or Telus?
Great. So the good news is neither one of those is a bad bet. I don't think you're going to get hurt with either. I think that in the long run, I think Telus is one that I would want to own. And I think it's had a great run over the last couple of years. I think it's going to continue to. They've been raising the dividend twice a year over the last 3 years, which is something they committed to do publicly. I would expect them to continue with that policy because the free cash flow at Telus is growing, and they've got about the lowest payout of the telecom services companies. And so I think that you can expect to see pretty steady progression in that. And we do believe that long-run dividend growth is going to continue to be a major theme. TD in the short to intermediate term, I think will continue to perform well. I think the banks in general will be long-term challenged as to where they get their growth. TD is growing market share in retail banking in the U.S., which I think is a positive. But as far as industry goes, I like the Telus longer run than the TD.
Do you hold both?
We own them both.
Okay, Telus and TD. Here's Matt in St. Catharines ahead of earnings season kicking off tomorrow. Go ahead, Matt.
Yes, I'm keeping my fingers crossed with Alcoa. But I've been reading about all these big contracts being signed by Bombardier, and also hearing about all the pipeline expansion and auto sales going through the roof. So, knowing that aluminum is a component in all of these fast-moving sectors, I'm just wondering why Alcoa is still in the doghouse. And I was wondering if I could get David's opinion on Alcoa for a sector turnaround in 2013.
Right.
Thank you.
Okay, thanks, Matt. Is this a big supply problem here with Alcoa?
The problem is with aluminum, there's never tight supply. Mm-hmm. There's no shortage of raw materials, and so it's very hard for them to have pricing power. And you've got Alcoa coming from all around the world. Aluminum. Alcoa itself, sadly has a history of disappointing when it comes to earnings. They're often the first to report and very often are the first to disappoint. And when you look at the numbers really don't point to things getting a lot better in the near term. I think if you wanted base metals, there's probably other places to be. And I think that Alcoa, my history with Alcoa has been that I've rarely made money in the stock. So I'd avoid it.
Here's Anita. She's in Markham, Ontario. Hi there.
Hi, good evening. My question is regarding Microsoft. I bought it for $29.50 about 6 months back, thinking that it will really shoot up once Windows 8 comes along, but that doesn't seem to be the case. So my question is, should I hold on to it, or should I sell it and take a loss? I'll hang up and listen to you. Thank you.
Great. Anita, the problem that Microsoft is facing is they're facing a big uphill battle on the mobile front. Google really is winning, and of course Apple. In the tablet space, you know, their tablet really has been a little bit of a flop so far. I think probably the jury's still out, but it really hasn't had the impact that they had hoped it would have. So I think that tablet and mobile were two things that they were hopeful were going to have a big impact. On the Windows 8 operating system, you know, it's just been a little bit slower than I think people had hoped. So look, very little financial risk in this one. They got a great balance sheet. They got lots of cash. You know, you're going to pick up a nice dividend. But the fact is, it's a laggard stock. And when you make an investment in common shares, you're looking for two things: price appreciation and a dividend. If you're getting a dividend and you're getting price depreciation, it's not a win. So it's a laggard in a sector that has been an underperformer. I think that I would avoid the stock.
When's the last time you held Microsoft?
Well, you know, we bought some stock earlier last year, hoping to see some positive early signs, and it just didn't come, and we like to cut our losses quickly and move on. So,
okay, let's shift gears. Different sector entirely. John's in Rockland, Ontario. Hi, John.
Good evening. Dave, I've been looking at Emera and some of the other utility stocks, and what's got me my attention is the high PE multiples that seem to have they've gained over time. And I'd like to know, in your opinion, at what time does a red flag go up in your mind when you're looking at utility sector regarding the PE multiples, and possibly if you have a chance to, what do you think about the utility sector going forward? I'll hang up and listen to your answer.
Okay.
Thank you.
So, John, in the dividend camp, the utilities are probably going to be, you know, the most staid of the group. So you're not looking for big upside, you're looking for some appreciation, and you're looking for your dividend yield. And I know that we look at the multiple that they trade for and look at relative to history and say, is it expensive or is it inexpensive? And if you're looking at a very short period of time, certainly anything that's a dividend payer looks expensive relative to the recent history. But, you know, all you have to do is go back to the late 50s and early 60s in a different time, in a time when markets were having, some difficulty providing investors yield. And in that market, companies that could provide a consistent dividend that was in excess of what they could get in a government bond traded at high multiples. And you went to a period of time in the late 60s where people were investing in stocks, the Nifty 50, those with consistent dividends. It may well be that over the next 2 or 3 years that dividend payers continue to be expensive on a relative basis if the alternative, government bonds or term deposits, really don't cut it for investors. So people go a little bit further out on the risk curve and pay a little bit higher price for the higher yield. And what you should see is some dividend growth in the dividend itself. Now, if you get into a period where for 3 or 4 months the markets have a little rally, they may underperform a little. But the good news is on the downside, they got a lot less risk and a lot less downside volatility. So I think that in general, we've got a population that's looking for yield. It's going to continue to look for yield. I don't think we're going to see long-term interest rates rocketing higher. I think we're going to see low, slow growth for some period of time to come. And so I think that it's okay to pay a higher valuation for these companies.
And do you hold Emera?
We don't own it currently.
Don't, okay. A short break here with David Burrows. We'll have a look at his past picks right after this.